Hi, I'm Realtor Bert Taddei. Welcome to another video in my educational series I'd like to call Sipping Coffee or Tea with Realtor Bert Taddei. This is an educational video series which is going to maneuver through the hype, the hoopla, and yeah, even the media negativity surrounding our real estate industry. So let's get started. This is video number 4 in a series of 4 videos in terms of real estate investing. This is one of my favorite topics within real estate investing. Let's recap real quick the other 3 videos that we've already seen. And the first one is, of course, the basics of real estate investing, right? The second one, of course, was the tips for buying rental properties. And the third video was understanding ROI, that's return on investment, and cash flow. All really, really good and relevant topics. However, this is where we get to the good stuff. This is my favorite one in this particular subject matter of real estate investing, which I love. And I'm going to tell you why I love real estate investing because of what we're going to be discussing here in this video, which are tax benefits of real estate investment. So, the property United States tax code, as I might have mentioned in other videos, is really a roadmap for us, right? So the government incentivizes us to, and the private sector, to invest in certain types of industries, right? Which are beneficial to the public at large. Look into federal opportunity zones. That's a really, really good way for you to find benefits of investment in specific areas in which you live, right? In whatever city that is. I'm in San Antonio, Texas. And it's a really interesting topic because, again, the government incentivizes, they offer benefits to investment in the private sector, that's you and me, in something that could be beneficial to the public at large. So follow this roadmap, right? I'm going to go over a couple of topics I think within these tax benefits. I think they're going to be very interesting to you and that you'll find them maybe as beneficial as I do. So the first one is mortgage interest deduction. You can deduct the interest paid on your mortgage from your taxable income, reducing your overall tax liability. I like this because, again, there's you're going to be paying interest if you're financing, which, again, as we've discussed, we all love Dave Ramsey. He has some really solid advice on becoming debt free and things of that nature. However, with 20% down, 25% for real estate, you'll find that you can enjoy a really, really good investment. And yeah, even spread between what you're paying to the bank and what you're charging for rent, and thereby taking that spread and becoming profitable, right? And the interest that you do pay on that financing, which is a really, really tremendous tool for you to deduct that interest, mortgage interest, on the debt service, and it's going to be a really, really terrific way for you to save, right, on your expenses. And if you're an S corporation like I am, it's a pass-through entity, and now you're just paying yourself a fair and reasonable salary instead of the full amount of your income, right, for that year in your investment. So look into that. And by the way, I'm going to give you a disclaimer here. I'm a real estate broker in the great state of Texas, and I'm the broker owner of Santino Properties LLC. I am not, however, a tax professional. So these tax benefits I'm talking about are a very general discussion, and it should not be construed as tax advice in any way, shape, or form. I do, as I've told you in every single one of these videos on this topic of real estate investment, I do recommend that you hire a tax strategist, not a bean counter. Anybody can do that. You can go down to H&R Block and they'll do your taxes for you. No, I'm talking about a bona fide tax strategist, someone who's going to help you and guide you through your journey of real estate investment, and tell you what the best strategies are to achieve your goals. And we're going to be talking in this video about 1031 exchanges. My guy is really competent. They're really good at what they do in tax strategy. Once again, reach out to me if you have any questions on this particular topic. I'll be happy to make introductions with this company that I work with. And they work all over the country, by the way. They're licensed in all states. So reach out to me. I'd be happy to be a resource to you. 210-376-TALK. And by the way, as long as we're on the topic, I'd like for you to like this page, right? I'd like for you to share the content if you find it interesting, relevant, beneficial. We're meant to be a resource and a gift to all those who enter our lives. So we want to be a blessing to you as well. So feel free to reach out to me. No obligation whatsoever. Just reach out and let's have a dialogue. Let's talk about real estate investment, real estate in general. 210-376-TALK. The second thing I'd like to talk about is depreciation. So the definition of depreciation is really allowing you to deduct the cost of the property over its useful life. And with residential properties, it's 27 and a half years. In research for this particular video, I found something around to the tune of 40 years for commercial properties, but I always thought it was 35 years. So again, consult that tax professional that will give you your sound advice that you need. Again, I'm an expert in real estate and the buying and selling of real estate, residential real estate, folks. I've owned commercial properties. I've done my own commercial deals as a broker, and I feel comfortable doing that to an extent. Dispensing advice, however, is a different deal in the commercial space, but I have really, really competent partners. So reach out to me for some referrals. I'd be happy to connect you with some really terrific commercial agents that can help you out and do a competent job, just as I do a competent job on the residential side. But I do recommend that you also consult that tax professional for the useful life through which to depreciate your commercial property. Remember, 4 doors or fewer is residential. It's considered residential. This is anywhere in the country, by the way. 5 doors and more is commercial. So if you're buying apartments, for example, you're buying a single family home, a duplex, triplex, quadruplex, those are all 4 families or fewer. So in Texas, we use a standard form. It's very ubiquitously used. It's a 1 to 4 family, right? So that's what that means, right? 1 to 4 family residential contract. So 5 doors or more is going to be a commercial property. So but through this depreciation, you're able to reduce your taxable income without affecting your cash flow. It's a non-cash expense. So again, consult your tax professional on that for depreciation, which is really interesting because it can be an older building, and let's say it's a building that was built in 1980, right? But you're not the first owner. Well, guess what? Somebody else has depreciated that building over its useful life. For however many years they owned it, right? And then it resets again when the next person comes in and buys the property. Its physical age is obviously more than what it was before, but it's almost like you're refreshing it, and now it's going to be another 27 and a half years, or for commercial property, whatever that is, 35, 40 years, whatever. Now, the third thing I want to talk to you about are property expenses. So deductible expenses include property management fees, maintenance and repairs, as well as property taxes, insurance, utilities, and advertising costs. These are all deductible expenses. Is it dollar for dollar? Again, consult your tax professional on how that is so you can offset your income, right? Another kind of a quick tip for you is, if you're investing in property out of where you live, outside of where you live, then you have to go check on your property, right? Well, guess what? That trip is a deductible expense as well. I can't give you exact advice on that or how much of it or things of that nature. However, I have in the past owned property uh, outside of my where I live, and those trips and those hotel stays and all that stuff was all they were all deductible expenses. So um, the fun comes in when you own rental property that's by the beach or somewhere interesting, right? Anyway, just a quick tip, right? Capital gains tax is number 4 on my list. I'd like to tell you that the tax on the profit from the sale of an investment property is going to be taxable. Now, long-term capital gains are taxed at a lower rate if you than ordinary income if you hold it for more than a year. So again, consult your tax professional, but it's something to look at as far as capital gains. Now, I gave you a little bit of a teaser, right, and to talk to you about 1031 exchanges, and that is basically allowing you to defer your capital gains tax by reinvesting the proceeds from the sale of your property into a similar property. So it's a like kind within a specific time frame. So a 1031 exchange is really interesting because it's like you're kicking the can down the road. It's not tax avoidance because you're always going to pay the tax man. Okay, the question is, do you pay it or does somebody else pay it, like your heirs, when you die, right? I don't know, because it's tax deferment. Okay, and basically what that is you're going to buy a like property. You're going to take the proceeds from that sale, and you're going to have the title company those net proceeds to a qualified intermediary, not just anybody. Do not once you those funds hit your account, that's it. You have to pay capital gains tax. That's simple. Although, if you want to roll all of these net proceeds, all of it into a 1031 exchange with a qualified intermediary, and once again, reach out to me. I know a couple that do really good job. They're very professionals. That's all they do are 1031 exchanges, and you have to notify the IRS through your qualified intermediary. I think it's between 2 and 4 properties, or 2 and 5, or 2 or 3 properties, something like that. And you have to notify them within a specific time period, as I mentioned before. And I want to say it's within a month, 45 days, 45 days maybe. You have to give them that list of properties that you're looking at, and then you have to close within 6 months, I think it is. Anyway, look into have your tax professional assist you with that, and also ask them if you can still do cost segregation studies, or cost seg, as they say, right? And the cost segregation study is basically going to be accelerated depreciation. So under the Trump tax plan from his first presidency, you can invest in real estate, and there's a schedule for each type of material or item that you put into your renovations, right? So windows can be depreciated at a certain a schedule, a certain number of years. Paint over a certain number of years. So you're going every component or finish that you're going to be putting into that property has its own schedule over which you depreciate, but you can accelerate that depreciation. Also, look to ask your tax professional about the deduction for vehicles over 6,000 pounds. That's another thing, right? You might want to look into. But the cost segregation study is something very interesting, right? Then you depreciate the individual items that you're putting into the property. So ask them about that. See if that's a good fit for you. But again, tax strategists are going to know about these things. Not just anybody knows about cost segs. So make sure that you consult someone who knows. And again, I know the people that I can introduce you to. Number five is pass-through deduction. So a qualified business income, or QBI, is the acronym. Deduction allows eligible real estate investors to deduct up to 20% of their net rental income, subject to certain limitations. Consult your tax professional. That one. Number six is, of course, the last one I want to tell you about, which is the home office deduction. So if you manage your rental properties from a home office, you may be able to deduct a portion of your home expenses. For example, utilities, mortgage interest, things of that nature related to the office space. So what you'll do is you'll take, the way I have, the measurements of your office relative to your total square footage of your home, right? I'm in my home office. This is my house. I have so many square feet in my house. I have so many square feet from my office. There's a percentage, and that percentage, of course, represents what you can deduct for your home office, right? There's a lot of misconceptions about home offices, and that you can't have one, and that it's not, and that it's flags. It could flag an audit, and I've been taking the home deduction, and my tax strategist has told me don't worry about all that stuff. Just do it the right way, and make sure you through us will make sure that you're deducting the right expenses, and it should not flag an audit. So by understanding these aspects of real estate investment, such as the tax benefits, we believe that investors can make informed decisions to maximize their returns, as well as to manage or mitigate risks effectively, right? And take advantage of the various financial and tax benefits which are available to you as an investor. So hopefully this has been interesting for you. This is video number 4 of a 4-part series on real estate investment. Hopefully you found these videos interesting. Again, be sure to like the page, subscribe, sign up for alerts for when I go live, and you'll also be alerted whenever a new video is added to my platform, wherever you're watching this. Feel free to share my content and reach out to me. I'm offering you, I'm extending an offer to reach out to me and ask whatever questions about real estate I can answer. Be happy to, and if not, I'll put you in contact with the appropriate professionals that can help you if it's not my outside of my field of expertise, I should say. So hopefully it's been interesting for you. Once again, I'm broker owner of Santino Properties LLC, a boutique brokerage in San Antonio, helping San Antonio homeowners win. That's buyers and sellers win in a competitive San Antonio marketplace through the effective and unique use of marketing. Hopefully this has been interesting for you, and you found this to be a resource and of service to you. This is called a sipping coffee or tea with Realtor Bert Taddei, and hopefully you found this interesting. Feel free to reach out to me, 210-376-TALK. And that's it for now. Thanks for watching.